So in the previous video, we done top-down analysis on the FUSD pair. Now it's time to break down this pair even more and find some structure through counter trend lines and trend lines. Now again, another common misconception between investors is that the trend lines work exactly how they would with Forex and stocks, and this is far from the truth. And this is again on a case-by-case basis. Every crypto that you look at will work in a different way with trend lines. This means it can sometimes go from wick to wick, or if not, it can be the complete opposite. It could be from the body of the candle to the wick of a candle, or from the body to the body. So it's really hard to actually determine how to do this for each pair. So what we're going to do is we're going to break this down for you in a very simple way. So if we go first to the weekly, every single main trend line, not counter trend line, but actual trend line, will be done on the weekly chart. That is because on the monthly chart, we currently do not have enough data or candles to really get a valid trend line going. This is because the market is so new. There is no real other reason. So the weekly is just about enough to give us a decent trend line and get a real insight into the current trend we're following. What we would do for the FUSD pair, I can already see a nice trend line forming. And what you will notice when I do this is this will not actually connect the dots very well. So you can see we only have two connections. We have the wick, we have the other wick, and then we have the connection here. Now I could easily do this, and it doesn't really make the connection valid. If I go down to the daily, you can see this does not make sense whatsoever. So if I was to adjust this on the daily, then move this to the body, we would completely rip through the chart, meaning there's no real valid trend line. So what you actually do is you fine tune this from the wick to the wick, and you just extend this out like that. Just because this part has not met yet and this data has not touched the line, it does not mean it's not a valid trend line. And what you will actually notice, and what you may have been a bit considerate about, is this here is in fact another trend line retest. And what happens in cryptocurrencies, which catches a lot of people out especially, and this has just taken a few years to realize, guys, what happens is we will spike down, we will come towards the trend line, we will break through it, suck investors into believing we have now broken the trend line and we are going to go lower. However, the price then spikes down, hits another key level of support, and then we retest upwards again. So just because it's not a pinpoint test, it does not mean we have not retested. So as you can see here, we actually have 3 tests on this trend line. And straight from this bounce, we did in fact begin to make new highs again, and we are slowly reaching the $400 handle from this region. So it is really important to set these levels from the weekly and just get a good understanding of where the price is going. So we go back to the daily. We've now identified this, and I will show you another example in a short second. But first, we now need to identify the counter trend lines. So, slightly adjust this chart, and again we can see a nice counter trend already. Now what you'll notice is if I do wick to wick, it doesn't really add up. You can just about do one there. Again, a valid breakout actually. This does work, but how it would normally work in this situation is you cannot be afraid to just really get the bodies and the candles involved. And what that means is you've got the trend line here, the counter trend, test, test, breakthrough. We've tested the trend line, we've broken up and retested. And as you can see, the way the candles have respected the counter trend shows that this was the valid trend line after all. Whereas if you were here, you would have had to wait an extra maybe 2 weeks just to really catch the breakout. So again, you have to just lower this down, really work around with this, see which levels respect the most. What you can see here is if we had caught it from this point and then the retest down here, we would have in fact made a lot more money. So it's all down to getting these levels absolutely correct, which is crucial. So if we delete this, we can notice another line has been formed. Extend that out to here, we're already seeing potential levels Ether could reach when we extend this out. So if we continue extending this up, we do know in the future this could be a key level to be tested by Ether. Again, this does almost correlate within the $450 region. So once there's a breakout, we could easily identify where we may potentially be retesting from in the future. So it's all down to just playing around, seeing which levels work best. Don't try and wing it. There's no point going from wick to wick and expecting it to work just like that. As you can see, it doesn't really make sense. We could also identify this one here. Just like that. So we've actually broken through that candle and we've put a line straight through this, and that does not mean it's invalid. So again, we've gone up, we've almost tested, we've retested, hit the trend line, broken through and retested again. So it's all down to how you actually view this and experiment with this. It does take a long time, it is not easy to identify, but eventually practice and practice, guys. Once you get the hang of this, you're just building this foundation, so just everything the price does makes sense to you, and it's almost premeditated. Everything we do in cryptocurrency has to be premeditated. You have to know, for example, you'll break this counter trend, it will go upwards, it will hit your next resistance. You then know it may go to the next level of resistance, just $100 higher, and then you know when it retests, your trend line is perfectly placed. So you know it will correlate with the support and the trend line. You then think, okay, I have another level set at $400. Price could easily hit this region. And this is what people are failing to realize. And it's just causing a lot of downfall for many. So really take this section into account, really practice, and just get those lines perfect. We'll use another example. Again, one of my favorite pairs for CounterTrends is actually XRP USD. That's because we'll go to the weekly, set one here, and straight away we have a nice trend line. We have a test, we have another test, we have a spike through, we have two respected weekly candles just here. So if you go down to the daily now, you can see the perfection of these levels. So that's literally from the beginning of time and before the initial 4,000% surge. So you can see this is an extremely long-term trend line, and it has been respected for an extended period of time. Now, when it comes to counter trends, we have just broken one of the key counter trends, and this is essentially what's going to send XRP absolutely soaring to the $1 region. So if we set this here and we extend this all the way down, you will notice we perfectly it broke out. All of the levels were met to the T. We respected the support, broke through, retested the counter trend. But not only did we retest the counter trend, we also retested the support level we had set up for almost 3 months. So guys, again, very short support and resistance levels. Keep them short. There's no need for wide support and resistance levels. It does not work that way. So again, have a little look at the XRP chart. Have a look at the F chart. The current charts at the moment, especially for these two, they have some great opportunities to practice with trend lines and counter trends. So now it's time to move to the next lesson. Please guys, take notes and make sure you study this lesson hard. See you in the next lesson.